Hi guys. Welcome to Pro Finance. So before we get started, make sure to hit that like button, also subscribe to my channel. In this video, we will talk about best index funds in October 2022. So make sure to watch the full video. An index fund is an investment fund, either a mutual fund or an exchange-traded fund, ETF, that is based on a preset basket of stocks, or index. This index may be created by the fund manager itself or by another company such as an investment bank or a brokerage. These fund managers then mimic the index, creating a fund that looks as much as possible like the index, without actively managing the fund. Over time the index changes, as companies are added and removed, and the fund manager mechanically replicates those changes in the fund. Some of the most watched indexes fill up the financial news every night and are often used as shorthand for the performance of the market, with investors tracking them to get a read on how stocks as a whole are faring. Why are index funds a popular investment? Index funds are popular with investors because they promise ownership of a wide variety of stocks, greater diversification and lower risk, usually all at a low cost. That's why many investors, especially beginners, find index funds to be superior investments to individual stocks. Attractive returns. Like all stocks, major indexes will fluctuate. But over time indexes have made solid returns, such as the S&P 500's long-term record of about 10% annually. That doesn't mean index funds make money every year, but over long periods of time that's been the average return. Diversification. Investors like index funds because they offer immediate diversification. With one purchase, investors can own a wide swath of companies. One share of an index fund based on the S&P 500 provides ownership in hundreds of companies, while a share of NASDAQ 100 fund offers exposure to about 100 companies. Lower risk. Because they're diversified, investing in an index fund is lower risk than owning a few individual stocks. That doesn't mean you can't lose money or that they're as safe as a CD, for example, but the index will usually fluctuate a lot less than an individual stock. Low cost. Index funds can charge very little for these benefits, with a low expense ratio. For larger funds you may pay $3 to $10 per year for every $10,000 you have invested. In fact, one fund, listed above, charges you no expense ratio at all. When it comes to index funds, cost is one of the most important factors in your total return. 1. Fidelity Zero Large Cap Index, FNLX. Overview. The Fidelity Zero Large Cap Index Mutual Fund is part of the investment company's foray into mutual funds with no expense ratio, thus its zero moniker. The fund doesn't officially track the S&P 500, technically it follows the Fidelity US Large Cap Index, but the difference is academic. The real difference is that investor-friendly Fidelity doesn't have to cough up a licensing fee to use the S&P name, keeping costs lower for investors. Expense ratio, 0%. That means every $10,000 invested would cost $0 annually. Who is it good for? Great for investors looking for a broadly diversified index fund at a low cost to serve as a core holding in their portfolio. Where to get it? The fund can be purchased directly from the fund company or through most online brokers. 2. Vanguard S&P 500 ETF, VOO. Overview. As its name suggests, the Vanguard S&P 500 tracks the S&P 500 index, and it's one of the largest funds on the market with hundreds of billions in the fund. This ETF began trading in 2010, and it's backed by Vanguard, one of the powerhouses of the fund industry. Expense ratio, 0.03%. That means every $10,000 invested would cost $3 annually. Who is it good for? Great for investors looking for a broadly diversified index fund at a low cost to serve as a core holding in their portfolio. Where to get it? The fund can be purchased directly from the fund company or through most online brokers. 3. SPDR S&P 500 ETF Trust, SPY. Overview. The SPDR S&P 500 ETF is the granddaddy of ETFs, having been founded all the way back in 1993. It helped kick off the wave of ETF investing that has become so popular today. With hundreds of billions in the fund, it's among the most popular ETFs. The fund is sponsored by State Street Global Advisors, another heavyweight in the industry, and it tracks the S&P 500. Expense ratio, 0.095%. That means every $10,000 invested would cost $9.50 annually. Who is it good for? Great for investors looking for a broadly diversified index fund at a low cost to serve as a core holding in their portfolio. Where to get it? the fund can be purchased directly from the fund company or through most online brokers. 4. iShares Core S&P 500 ETF, IVV. Overview: the iShares Core S&P 500 ETF is a fund sponsored by one of the largest fund companies, BlackRock. This iShares fund is one of the largest ETFs and it tracks the S&P 500. With an inception date of 2000, this fund is another long-tenured player that's tracked the index closely over time. Expense ratio, 0.03%. That means every $10,000 invested would cost $3 annually. Who is it good for? Great for investors looking for a broadly diversified index fund at a low cost to serve as a core holding in their portfolio. Where to get it? The fund can be purchased directly from the fund company or through most online brokers. 5. Schwab S&P 500 Index Fund, SWPPX. Overview: with tens of billions in assets, the Schwab S&P 500 Index Fund is on the smaller side of the heavyweights on this list, but that's not really a concern for investors. This mutual fund has a strong record dating back to 1997, and it's sponsored by Charles Schwab, one of the most respected names in the industry. Schwab is especially noted for its focus on making investor-friendly products, as evidenced by this fund's razor-thin expense ratio. Expense ratio, 0.02%. That means every $10,000 invested would cost $2 annually. Who is it good for? Great for investors looking for a broadly diversified index fund at a low cost to serve as a core holding in their portfolio. Where to get it? The fund can be purchased directly from the fund company or through most online brokers. 6. Best Nasdaq Index Funds. The Nasdaq 100 Index is another stock market index, but is not as diversified as the S&P 500 because of its large weighting in technology shares. These two funds track the largest non-financial companies in the index. Shelton Nasdaq 100 Index Direct, NASDAQ. Overview: the Shelton Nasdaq 100 Index Direct ETF tracks the performance of the largest non-financial companies in the Nasdaq 100 Index, which includes primarily tech companies. This mutual fund began trading in 2000 and has a strong record over the last 5 and 10 years. Expense ratio, 0.5%. That means every $10,000 invested would cost $50 annually. Who is it good for? A good fit for investors looking for an index fund that gives them exposure to the tech industry and growth-oriented companies. Where to get it? The fund can be purchased directly from the fund company or through most online brokers. 7. Invesco QQQ Trust ETF, QQQ. Overview: the Invesco QQQ Trust ETF is another index fund that tracks the performance of the largest non-financial companies in the Nasdaq 100 Index. This ETF started trading in 1999, and it's managed by Invesco, a fund giant. This fund is the top-performing large-cap fund in terms of total return over the 15 years to September 2021, according to Lipper. Expense ratio, 0.20%. That means every $10,000 invested would cost $20 annually. Who is it good for? Great for investors looking for a relatively low-cost index fund that focuses on technology and growth companies. Where to get it? The fund can be purchased directly from the fund company or through most online brokers. What do you think of our video? Let me know in the comments section below. If you enjoyed this video, make sure to hit that like button. Also subscribe to our channel before you go. Thank you for watching.